We're good, Dominic?
Yeah, I'm good too.
Thank you. Okay, good morning, everyone. We're here for a regular council meeting. Happy New Year's. It is January 4th. We've got an exciting year to share with you. So let's get started right now. Quick introductions. We have Councillor Shane Pelletier.
Good morning.
Councillor Janine Boulanger.
Good morning. Happy New Year, everybody.
Councillor Joel Lemoine.
Happy New Year, everybody.
Councillor Jason Bondarchuk.
Morning.
We have with us our CEO, Mitch Duval.
Good morning.
Our Assistant CEO, Dominic Lemoine.
Morning.
I think, is that everyone that's there with us right now?
We also
I'm
have
just
our
gonna-
CFO, Ahmed Zaman. Good morning.
Good morning. Okay, we're good. There was a couple bleeps there. We fixed that all.
Yeah, just two new people, Shannon and
Okay.
Brenda, joining.
Perfect. So the way we're doing the voting today is we're just going to do a show of hands or an aye or nay from council and myself, and then it'll keep it easy. So without further ado, we will go to item 1, meeting called to order. Do I have a mover? Councillor Shane Pelletier, second. You know what, guys? Sorry, you're going to have to say it because my screen goes blank when I look at my thing. Hold on. Okay, say it. Councillor Joel Lemoine. Okay, now we're good to go. Any comments before we call for the question? No, seeing none, I'll call for the question. All those in favor?
Aye.
Thank you. That is carried. Just making a split screen so my life's easier here. Okay, we open the meeting at 9:01 a.m. Item 2, adoption of the agenda. Do I have a mover?
Jason. Joel.
Uh-oh. Uh-oh.
Can we share the,
Here?
is there a way to share the agenda as well on the screen or no?
Then they won't see anything.
Okay.
We lost our mayor.
All right. Yep.
Thank you.
You got the mover and seconder on adoption agenda?
Yes, I do.
Okay, all in favor?
Aye.
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 Adoption of minutes. I get a mover
Name.
and seconder.
Joel.
Councillor Lemoine, over to you, Mr. CEO.
Last regular council meeting was held December 21st, whereby variation conditional use was approved by council. There was also a rezoning in the Ile-des-Chênes North area, as well as first reading to a rezoning just north of Sandolph. That public hearing will be held on January 18th. Also a few policy changes, language regarding the conferences and attendance, and as well as 2023 salaries were adopted by council.
Thank you. Any questions on that?
No, none here.
Call for a question. All in favor?
Aye.
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 The mayor doesn't look like he's back, but he says he is.
Can you guys see me? I'm back.
We can hear you.
I don't know what's going on with this thing. Okay, well, continue, Shane, until my camera pops back on.
Okay, you might just want to turn it off and then fire
Yeah.
it back up. Committee reports, none. Off to finance. Item 5.1, accounts paid to be approved. Get a mover.
Councillor Blanchet.
And second, Councillor Bondarchuk. Mr. CEO, the floor is yours.
Batch number 16743 in the amount of $24,679. Basically, some quick pays were done there regarding SRE policies for the municipal equipment, and as well as some Grand Point grading in the area for public works.
Thank you. Any questions on that, council?
Nope.
Nope.
Okay, call for the question. All in favor?
Aye.
Aye.
Aye. Item 5.2, accounts not paid to be approved. Get a mover.
I will.
Okay,
Jason and Joel.
Council- Yeah, thank you. Floor is yours, Mr. CEO.
Two batches, 16740 in the amount of $1,327, electronic fund transfers. The other batch is 16741 in the amount of $51,956. Basically, just minor expenses, provided in the Assistant CEO's report is a summary of those 51,000.
Thank you. Any questions on those batches, council?
Nope.
All right, we'll
Here.
call for the question. All in favor?
Aye.
Thank you. 5.2.1, council indemnities. Get a mover.
Counselor Belanger.
And seconder, Councilor Lemoine. Mr. Mayor, we'll just get through the council indemnities and then you can jump back in.
Okay, thank you.
Mr. CEO, up to you.
Councilor indemnities for the month of December, provided to you. My apologies for not providing the details on it. The hours range from 15 to 38 hours. Going through them individually, it looks like just different seminars and presentations, day presentations that occurred, that some participated, some did not, so no concerns at this point.
Thank you. Call for the question. All in favor? Thank you. I shall pass the chair back to his worship.
Thank you, Deputy Mayor. I was fighting with my computer. I told her I was going to break up with her, so she turned off. So, okay, item 5.3, payroll to be approved. Do I have a mover? Councillor Bondarchuk, second. Councillor Pelletier, thank you.
We have two biweekly staff payrolls, payroll 25 and payroll 26. Both have significant hours of overtime on the public works side of things, but I think that is just due to weather and snowfalls, and if it's not the snowfalls, could be the winds drifting the snows back in, so public works staying on top of the matter, clearing roads. The other payroll is quarterly 4 for the fire department, so that will wind up their year end as well as far as hours produced, and again, no concerns there.
Thank you. Any questions or comments from council?
I actually do. Can I get a list of, this is showing all the bank used and bank new and vacation and OT and all that. Can I get a breakdown with accrued to date for all the above, please?
An updated list of accrued.
I just want to know, where we're at with liability on payroll right now.
Okay.
Thank you. Anyone else? No. Okay, I'll call for the question. All those in favor? That's carried. Thank you. Item 5.4, in 2023 interim budget. Do I have a mover?
Counselor Belanger.
Councillor Belanger, second. Councillor Pelletier, thank you.
For the new councilors, just as an FYI, municipalities cannot spend $1 unless an interim budget is approved or a 2023 budget is approved. So this is just a temporary measure, interim budget, to carry us until 2023 budget is adopted by council. So what we've done is we've looked at last year's estimations with the actual current expenses that we've incurred, looked at that and adjusted the numbers accordingly. So those numbers are provided to you in the resolution.
Thank you. Any questions or comments from council?
I have one.
Go ahead, Councillor Lemoine. Yeah.
So what you're saying, Mitch, is that, well, in the weeks to come or a couple months from now, there'll be broken down or more detail within municipal services?
Yes, absolutely. This is just an interim, high level, just to say, yes, we're authorized to spend money. Other than that, the true budget you'll see a total breakdown of those figures.
Okay, thank you.
And as Councillor Lemoine had suggested, in the weeks to come.
Okay.
We will see what our new CFO could provide for us.
Thank
What's
you.
our projected interim duration?
Last year it said May 31st. No.
Well, the budget is required by May 15th, but we're going to target something a lot earlier than that. Hopefully by end of March, we'll have a very good draft.
Yes, yeah.
Perfect. So February 28th it is. Thank you, Mr. CEO.
Welcome aboard.
Yeah. Okay, any other questions from council? Okay, I'll call for the question. All those in favor?
Aye.
That's carried. Thank you. And we are running 4 minutes early, but we'll go to 6.1 delegations, 2021 financial statements presentation.
It's under our understanding that the auditors are not available at 9:15. They will be here at 9:30, so we'll have to maybe suspend. If we finish early, we'll have to suspend and re-adjourn.
Okay, thank you. We will go on to 7.1.1 Red Boyne Watershed District, the expansion project. Do I have a mover?
Councillor Pelletier?
Thank you. Second, Councillor Bodnarchuk.
Letter was received from the province regarding the Red Boyne Watershed District expansion. Similar to what happened last year with the Armor Rosser, St. Francis Xavier, and Woodland, the RMs of McDonald and Roland are interested in joining the Red Boyne Water District. So calculations have been provided to you regarding that matter. So again, our percentage would drop overall as the two RMs come on board.
Perfect. Thank you. Any questions from council?
None here.
Nope.
It's exciting.
Oh, yeah. Call for the question. All those in favor?
Aye.
That's carried. Thank you. 7.1.2 2023 tax sale. Do I have a mover? Councillor Bondarchuk, second.
Councillor Blanchet.
Thank you.
Slowly moving ahead in the current year, we'd like to appoint Tax Service as our collection agency for outstanding taxes. Anything outstanding for 2021, if not collected, will be subject to tax sale date to be determined. Or the date is actually there, September 27th. My apologies.
Perfect. Thank you. September 27th. Council, any questions?
None
Nope.
here.
Okay, I'll call for the question. All those in favor? That's carried. Thank you. 7.1.3 IDC daycare provider for the new site. Do I have a mover?
Councillor Pelletier?
Thank you. Second, Councillor Lemoine. Thank you.
Moving ahead with the Ile-des-Chênes daycare project for the new site that has been chosen. We're currently continually working with the province and John Q. Built regarding this project. The daycare provider RFP closed in mid-September. We were fortunate to at least get one provider, that being the Galerie Ile-des-Chênes. Mayor Chris, Councillor Pelletier, and myself did an evaluation on the proposal, and we are recommending that the Galerie Ile-des-Chênes is the perfect fit for the community. So my recommendation and our recommendation would be to pass a resolution regarding the Galerie Ile-des-Chênes for the proposed daycare.
Perfect. Thank you, Mr. CEO. Yes, you know, even before reviewing, I've known this daycare for quite some time. They've been a pillar in Ile-des-Chênes. I think Councillor Pelletier can attest to that as well. So it's a great fit, and we're happy to have them to be a part of it. Council, any other questions or comments?
So just to clarify, the existing daycare that's there will, well, basically they'll run both
Yeah.
Okay.
So there'll
And-
be two sites, one
Yep.
provider basically split, but that's their responsibility to manage both facilities.
And the staffing and everything that goes with it.
You betcha.
Perfect. Anything
I just
else?
Yeah, I just had a question. Mr. CAO, you said that the site has now been chosen, that's finalized?
Yes. In the grand
That's
scheme of
great
things,
news.
yes. Yeah.
Okay, that's good news. Thank you. I know that was a struggle.
Awesome. Okay. I will call for the question. All those in favor? That's carried. Thank you. 7.1.4 November 2022 building permit reports. Do I have a mover?
Councillor Blanchet.
Councillor Lemoine, second by Councillor Belanger.
November 2022 stats, 15 permits issued, total value of construction of about 3.8 million, total fees brought in as $12,000, brings us a total to date for 2022 at 224 permits, 54 million in assessment, and 160,000 in building fees. Building fees slightly down, everything just a little bit slightly down compared to 2021 at this point in time.
Thank you. Yeah, I still think it's strong. I'm just, for the record, I think we've seen a great year, even though the construction age or year wasn't as strong as it was the year before. So it's good to see the numbers still over that 50 million mark. Anything else from council?
Nothing here.
No. Call for the question. All those in favor? That's carried. Thank you. It is 9:16. We are going to suspend the meeting until 9:30 a.m., Mr. CEO.
Correct?
So we will suspend it. And how do you want to do the recording process?
We will stop the recording, I think. There's a few online, I believe. We will leave the link open and then come back at 9:30 and resume as regular scheduled programming.
Perfect. Does council have anything they want to discuss with the CEO? Oh, sorry, you can stop recording now. Perfect. Welcome back, everyone. We are here to continue the regular council meeting for January 4th. We will reopen it at 9:31 a.m. Mr. Chair, do I need a mover to open that meeting again?
No, we're good.
Thank you. Okay, so we have just one item left on the agenda, and that is the delegation for the 2021 financial statements presentation. No movers, seconders required, so I will just hand it over to our auditors, I believe, Mr. CEO.
Correct. I believe on the line we have Ian from the Exchange Group, our new auditors that council appointed last year.
Welcome, Ian.
Good morning.
Good morning.
Good
Can
morning.
everyone hear me okay?
Yes.
Yep.
Okay. First of all, my profound apologies. I got my mornings mixed up. That's neither here nor there, so I do apologize for the delay. However, I won't take up a whole pile of your time. So the first year of any new audit engagement is always sort of an exercise in learning the systems and learning the staffing and how various municipalities, do things a bit differently. So this is our first year. So as always, a big thank you goes out to the CAO and the staff of the municipality. We couldn't do our jobs without them. So a big thanks for that. And it's especially important in a transition year like this year. Obviously, we'd much rather be doing this presentation or discussion in June. However, due to some unforeseen circumstances, the audit was significantly delayed this year. One thing that I'd like to discuss a little bit surrounding that is this partnership that Richaud has with GFL, I believe, for the landfill. And from my understanding with discussions with Mitch in the past, as well as the current auditor, who happens to be an associate of ours in the office here, the delays really come from GFL itself. They're very remiss to sort of push anything through. So I don't think we actually finalized, or Gary didn't get that audit finalized until early October. So that makes it really difficult for us to do much. I guess the question that I would have is, Richaud seems to be the majority partner in that agreement, and yet all of the bookkeeping and the accounting and processes of getting that entity audited are sort of administered by a different entity. And my question would be, would it not make more sense for Richaud to take that over? But I will leave that as a discussion point for council to discuss at a different point in time. But it certainly would make some sense if you're controlling that that process. I'm not sure why it was set up the way it was, but that's what it is. Anyway, so that's just sort of a discussion point. So I will give you the 20,000-foot view synopsis of the audit. I'm not sure if you all have copies of it, but whether you do or you don't, that's not really hugely important. So the very first page after the preambles is the auditor's report, and this is essentially the document that council is and the ratepayers of the municipality are paying us the ungodly sums to produce. The audit report is pretty simple. It's the best way to describe it. It's a third-party, independent third-party verification of the financial results of the municipality as at the end of the fiscal year. This is not a forensic audit. This is a financial statement audit. We basically, and through a process of audit procedures and testing, verify that the numbers presented in the financial statements are fairly presented in accordance with the framework as required by the province, and that would be the Public Sector Accounting Board standards. So we audited the accompanying financial statements of the municipality, which comprise the consolidated statements of financial position as at December 31, 2021, and the consolidated statement of operations and accumulated surplus, change in net financial assets and cash flows for the year then ended, and a summary of significant accounting policies and other explanatory information. In our opinion, the consolidated financial statements present fairly in all material respect the financial position of the RM of Richaud and the results of its operations, change in financial assets and cash flows for the year then ended in accordance with Canadian Public Sector Accounting Standards. So two key points there, everyone. These are consolidated financial statements. These are not simply the financial results of the municipality itself. Municipality has several government partnerships and controlled entities whose activities need to be summed up and consolidated into the results. So it does sort of skew the results somewhat, in the sense that you're reporting on activities that you don't directly control sometimes. And that, going back to my preliminary conversation about your partnership with GFL and the landfill and why we needed to wait for that stuff to come in. So when you're looking at the financial results, the revenues, expenditures, the assets and the liabilities, you do need to keep that in mind. The second really important one there is the term that we in all material respects. So materiality is a user-based concept. It basically is a tolerable level of error that you would not change. A knowledgeable user wouldn't change their decisions based on an analysis of the financial statements predicated on. So we use 2% of general expenditures as our professional standard at the firm here. So that means conceivably there could be an error of up to $180,000 within the financial statements that we wouldn't necessarily change our opinion on. Now, having said that, that does not mean that there's errors in the financial statements. We're pretty picky when it comes to this stuff. We use materiality to drive our testing process, but within that concept, we have what we call performance materiality. So basically 75% is what we actually use. Any error or anything that we uncover that requires, in our opinion, a change up to 75% of materiality is a must. We have to change that number. We then drill that number down even further depending on the risk area of the financial statements that we're working in. And we go as low as 10% when we're doing our testing. Having said that, we didn't find anything that required a change that we weren't able to sort of get an agreement with. Sometimes what happens is there's a disagreement in professional opinion as to how something should be treated, whether it's payable to be recognized or revenue to be deferred or something like that. So there's usually some discussion between the audit team as to what we need to do with it. And then we go take it back to management and we say, like, this is what we found and this is what we feel is an appropriate treatment. And again, with the audit process this year, very smooth. There was no pushback. So we made all of those changes, and I'm sure that that Mitch and Dominique can provide you with the journal entries that we made. The remainder of the audit opinion, which is a very long-winded document. When I started doing this, it was about 3 paragraphs long, and we didn't audit every single item in the financial statements. We audited the old balance sheet, the old statement of operations, and everything else was explanatory information. So when we're doing a high-level analysis of it, it's suffice to talk about just those kind of things. The reason being is that even though we do audit everything else, there is one exception, and that would be the Schedule 14. Even though we do audit all those other things, there's still just more detail and explanatory information for the big numbers that appear on your balance sheet or your statement of financial position or your statement of operations. So we'll just sort of do a high-level pass over those, and then we'll have a quick discussion about the one schedule that we don't audit, and no auditor in the province of Manitoba does, for a simple fact that you can't provide an audited opinion under one framework and then have an audit opinion under another framework, which is what the province seems to want us all to do. So if we look at your consolidated statement of financial position, it's a snapshot in time of the financial resources and liabilities and accumulated surplus of the municipality as at December 31st, 2021. So when we go through this and we compare it to the prior year, the very first thing you note is that there's this restated number or restated line under the comparative figures. And the reason for that is that when we came in and we started auditing it, the very first thing that we do is, yes, we rely on the previous auditor's work to a certain extent, but we are obligated under professional standards to do our own analysis of those things. And what we uncovered was that there seemed to be a fairly significant difference between how the municipality historically has been accounting for amortization of some of the assets under the TCAs and what their policies actually said they should be. And that error was pretty significant. It was about $199,000. So we've restated prior years' expenditures relating to amortization expense and the carrying value of the TCAs on the balance sheet, and as a result, the opening surplus to that tune. And there is a note explaining that, and that would be deeper in the financial statements in the notes section. I believe it's note 19. Sorry, just lost my page here for a second. Yeah, so sorry, note 20. So during the audit, it was determined the amortization has been misstated in prior years. As I said, the adjustment to correct the error was to decrease amortization expense by $199,000, increase tangible carrying value of tangible capital assets by the same amount, and as a result, that adjustment increased the 2021 opening accumulated surplus of $199,000. People always ask me, like, does that mean that our previous auditor didn't do a good job or they were wrong? And my response is somewhat tongue-in-cheek. It's like, no, it just means we're righter than they were. But that's not exactly true. What drives most audit firms or most auditors' audit processes is what we like to call professional professional judgment. So here at the Exchange Group, we audit 32 Manitoba municipalities. I've been auditing municipalities probably since the dawn of time. It feels like most days. So I have my own experiences throughout my historical work life, as well as this ability to sort of look through how things are done in 32 different municipalities across the province. And so I form my professional opinion, which drives our audit testing on the basis of that. Joe Blow, auditor for, Big Accountant Inc., might have a different sense of what's important and what's not. So that's not to say that he's wrong or she's wrong and I'm right. But as I said earlier, it just means that I'm righter than they are at the moment because I'm the appointed auditor. So there's that. Is there any questions on that? Because that usually sort of creates a talking point or concerns or anything whenever we first take over an audit and we find something that we feel need to be restated. Again, at the end of the day, it's not a significant difference in your day-to-day operations, but it certainly sort of changes your opening numbers that we then go forward from.
So, Mr. Ian, on that 199 for the amortization, is that in the calculation over the years, or is it that just in 1 year that it created it?
No, it's a cumulative thing to a certain extent. Whether or not, the defined detail of whether it should be plugged through all in 1 year or not is sort of irrelevant, because say it's over 10 years, the individual impact over the 10 years is not material, so there's no need to restate. But by the time you got to the end of 2020, it was material, so we just push it through on that year anyway.
Okay, perfect, thanks.
Does that make sense?
Yeah, it does.
Okay. So in terms of like I said, Mitch has sort of threatened me with all sorts of punishment and death if I don't get through this real quick, because you guys are all busy and have different things to do today. So a quick high level pass over your financial assets and liabilities I'll do in a sec here, but I would like to make two comments. The first is, those charged with governance, that is council and management, tend to do their job, or the best tool that they have to do their job in terms of financial oversight is timely and accurate financial information. So there's 2 points to that. One, we're talking about the 2021 fiscal year end here, and it's now 2023. So it makes it difficult to sort of, if there's something that has come out of these financial statements, you can't go back in time and change these. So that's why we always talk about, we need to have these tidied up and cleaned up and done as quickly as possible for that reason. The second is that, like most municipalities, or like all municipalities, I should say, the municipality ratio is still required under the Municipal Act to prepare and submit a budget to the province every spring, the financial plan, the basis of which is the old municipal fund accounting. So it's more like farming, like it's more like a cash basis, in, money out, money left over kind of process. PSAB financial statements that get audited are a very different duck. So you do, and again, going back to my earlier comment, they're consolidated. So they're not just yours. So it makes it really difficult to say, well, how did we do when your monthly reporting and your budgeting process and all of that stuff and all the monitoring that you have in place is on one set of accounting rules, and then your audit's under another. So as a result of that, I've never been a massive fan of the province's insistence to go through pushing PSAB through, because it creates this vacuum between your day-to-day operations and then what you get at year end. Having said that, PSAB framework does provide some really good tools for those charged with governance to sort of have a quick look at once they understand what they're looking for in terms of like a quick fiscal pulse of the community. And the very first thing is this concept of carrying your assets on your balance sheet, tangible capital assets, and amortizing those assets over time as opposed to just expensing the acquisition in the year of acquisition. And the reason for that is that, your grader that you bought for $200,000, yes, it's a budgeted item. Yes, you spent the money on it, but it has use to the community over the next several years. Likewise, roadways, works, and all this other stuff have a finite lifespan that you then, as a council, need to sort of take into mind when you're talking about your capital expenditures over the years. What do we have to save for? How do we need to build our reserves? So that removing that as an annual expenditure and setting that up as a capital item to be amortized makes a lot of sense. So that's one positive of the PSAB statements. The second big positive that I always see is this concept of net financial assets. If you're a for-profit business and you want to go to the bank and borrow money, the very first thing they're going to do is they're going to take a quick look at your financial statements and calculate what your current ratio or your quick ratio is. It's your fiscal ability to pay their bills as they become due. So in black and white on your balance sheet now, you have this. This is called net financial assets. So at the end of 2021, you can see that the community had net financial assets of $11 million, $11.8 million versus 9.6 the prior year. So that sort of indicates an upward trend in terms of the fiscal ability of the community to pay its bills as they become due. And that's a very important tool for you. It's also a great, hey, look, we're better than you kind of conversation starter when you're at AMM conferences and you're talking to other communities, because almost everybody publishes their financial statements online now, and you can compare yourself to other municipalities by looking at that number and understanding that that number can go up and it can go down, and there's reasons for that. But generally speaking, if you continue to see an upward trend, it means that you're improving or stay still, I should say. Your fiscal capacity is good. If it goes down suddenly, there's usually a pretty good reason for that. And the primary reason is that you've utilized some of your current fiscal assets to invest in future capital assets, which provide a benefit to the ratepayers in the future. So, but again, like as a quick, okay, like how did we do? Look at that number, go forward. It's stable, it's going up, it's going down. And if it's going down, you can ascertain why it's going down, because it can indicate that, you know, you're overspending, you're missing your budgets too much. The other really good comparative that you can look at, and most communities always want to say, well, how are we doing, is this concept of how much you're holding in your reserves, and is it sufficient for the future needs of the community? Well, the primary concept or the primary reason for reserves is acquisition of future capital assets and pay down of debt. I mean, that's why they exist. So you can do some ratio analysis on, okay, well, how much do we have invested in our current capital assets? How much do we have in our reserves? And is that sufficient for our purposes? The difficulty with the discussion and the ratio analysis is, it's like if you go to 3 different life insurance salesmen and you say, how much life insurance do I require? You're going to get 3 completely different answers depending on, you know, the guy and your risk tolerance or whatever. So you do need to sort of keep in mind. So when you look at it, there's $8.7 million in your reserve portfolio. So you've got a carrying value of TCAs on your balance sheet of $63 million. So as a percentage analysis, that's like 13.6%. However, that is your amortized TCA balance. If you start talking about, okay, well, what's the cost? Well, that's 139 million. So now you drop to 6%. And then you start thinking, okay, well, 139 is what we're carrying the value at, but what's the replacement value? So now that's another number. So you do need to sort of keep in mind that the fiduciary duty of those charged with governance is not just for the lovely ratepayers that elected them. It's a perpetual fiduciary duty. It's to recognize that you can't simply abandon future ratepayers for the current ones, even though that's your tendency as politicians because they vote for you and the future guys aren't. But as a guy that grew up in a small town, I know that you know, these decisions that you make will haunt you or not haunt you for the rest of your life, because you'll be sitting in the coffee shop one day 12 years from now and somebody will be talking about some capital project that wasn't undertaken by council in 2023 that should have been, and blah blah blah. So you do need to keep in mind balancing that burden on ratepayers to build your reserves or to invest in capital assets over more than just the current year term. So again, if you look at sort of improvement versus slowdown, you know, last year's ratios are 6.7 million in your reserves, which was about 10.9% of your carrying value or your book value of your assets, versus 4.96 of the cost of those assets. And again, a little bit less if you start talking about replacement costs. So again, as a quick look, it looks like you're continuing to build your reserves of sufficient volume as you invest in assets, recognizing that you're going to need to carry on with that. In terms of the dollars and cents of the assets, I mean, you go through the $19 million worth of financial assets this year versus 17 last year. Biggest difference is a increase in your accounts receivable, which there was I've lost my note again. There was a significant increase in one of your sundry receivables for related parties. And again, this relates to the landfill. They had a significant receivable from their parent company. So then you consolidate that into your books. So that's the biggest difference in your receivables. And then a drop in your loans and advances relating to the pay down of the Ring Dike project loan. In terms of liabilities, 7.4 million this year, 7.4 million last year. Only change of note would be your payables and liabilities increased a little bit. And of course, everybody knows that's because our audit fees so high, so we have to accrue for that. There should be more laughing when I say that.
I laughed.
It's delayed.
No, sorry?
It's delayed.
Yeah. The increase there is largely due to land acquisition that hadn't been finalized yet. So there was some monies outstanding on that at the end of the year. So it's just a timing difference. Overall net financial assets, 11.8 million versus 9.6 last year. And again, we've talked about the TCAs overall. The accumulated surplus of the community is 76 million versus 71 in the prior year. So that's basically your liabilities, your assets, liabilities, and your surplus at the end of the year. The consolidated statement of operations, which is the next page, is the fiscal activity for the fiscal year. So it's all your revenues and all your liabilities. Overall revenues of 16 million versus 22 last year. Total expenses of 11 million versus 10 last year. One of the most powerful tools that we as auditors have in order to sort of drill into areas that we really want to start pulling strings at is what we call variance analysis. So in a for-profit business, we tend to sort of look at trends year over year on different financial statement areas. With municipalities, we tend to look at what your budgeted number was and what your actuals were. Because one thing that municipalities do very well is budget and adhere to those budgets, and there's usually a reason why they don't, if they don't. So when we go through and we look at your revenue numbers, the only real big difference there is user fees were budgeted significantly higher than came in. Other revenues are always just sort of a snapshot in time and a little bit odd for the municipality. The biggest difference between PSAB and municipal fund accounting is this concept of contributed assets. When a developer comes in and develops a subdivision and builds roads and stuff like that, when they turn that back over to the community, that comes in as a revenue in the year in which it gets turned over, and those are known as contributed assets. So we did have some this year, but there's a significant difference from last year. Like it's 2.3 million versus 5.8. And the same in water and sewer of 1.4 versus 4.5. And because there was, like I said, $1.3 million versus 5.3 in your other revenues, and in water and sewer 3.6 differences. So that's sort of the secondary variance. Like, okay, so we're off on budget. Well, what was comparison to actual? So then you see a variance the other way, and then you drill into it. So you get some sort of sense of how we sort of use variance analysis to drill into numbers. Overall expenses, very stable, very comparable to budget throughout the year. Only significant difference is this, public health and welfare services, which is rather odd. There's $1 million number that comes in from your consolidating entity in the transition from your financial plan budget to PSAB. And Schedule 10, which I'd encourage you to look at if you're really bored tonight and you're having trouble sleeping, sort of transitions that between your financial plan and how we present it for PSAB purposes. Like we need to be, you can't compare apples to oranges. So we take your financial plan budget, we add in a whole bunch of things that would be relative to a PSAB presentation and any consolidating financial information that we would have, and then we come up with this number, and that's all summarized in Schedule 10. Overall annual surplus 4.1 million this year versus 11 last year. looks like a significant decrease, but again, if you consider the fact that $8.9 million of that relates to contributed assets, it kind of makes some sense. Then you see this adjustment of an error, which changes the opening surplus for a closing accumulated surplus of 76 million. So that, ladies and gentlemen, in a nutshell, was your annual report. I will take before I ask for questions, I will take 5 seconds to talk about the dreaded Schedule 14. So back in 2009, the province forced all municipalities to go to PSAP. So in 2009, we as auditors started auditing under the PSAP framework, presented these financial statements to councils, had them approved, filed them with the province, and almost to a person, everyone in the province says, what the hell are these numbers? They don't make any sense. We don't understand. Reason being is because they didn't understand what they were asking for. And they thought that it would just sort of be nice, squeaky clean transition. Well, all of the monitoring sections of the act is predicated on what your surplus or deficit was under the Municipal Act, a municipal fund accounting. So now they're panicking, hit the panic button. Well, you got a $4 million surplus, but what does that really mean? Well, I don't know. Well, what do you mean you don't know? I said, well, we didn't do an audit under the old municipal fund. We were asked to audit under PSAB, so that's how we audited. That's the surplus. But that doesn't make any sense. Well, neither does your desire to have a bunch of people do this way. Anyway, in 2011 or 12, after 3 years of scrambling around in the dark trying to figure out what the hell it means, they said, well, we'll just add this schedule to the template, and the auditors will figure it out for us. And to a person, every audit firm in the province said, no, we won't, because you're not paying us to do an audit under the Municipal Act. You're paying us to do an audit under PSAB. The province isn't paying us to do an audit under the Municipal Act. So we can't, with any assurance, say what the deficit or the surplus under the Municipal Act was, because it's a completely different set of rules. So they came up with this schedule and they said, well, just reconcile it. And we all said, well, we can put the obvious things down, but we're not giving any guarantee. And that's why it says unaudited on this schedule. Interestingly enough, the province requires every municipality to pay ungodly audit fees to produce an audit. And this is the only schedule that they look at. This is the only schedule that you will get a question from the province on ever. So we do sort of try and make it as clean as possible, or at least have a fairly good understanding of what that top line number is. But again, the only number on these statements that are audited are the bottom line statements, and that's deficit per consolidated statement of operations, because that's part of our audit process. Everything else is just an attempt to reconcile back to a number. Now, excuse me. Normally, when the province get this, it's just to tick a box. They look at the top line and they say, as long as that number is positive, they'll tick the box, say there's no deficit that they need to worry about, and carry on. Richaud last year had a small deficit under the utility once we finished for our reconciliation. The province won't care about that. PUB might, except for the fact that PUB allows for deferred amortization of capital grants over several years, which aren't recognized in PSAB statements. And there's a note to that effect in your financial statements. So they'll just add that number in, that eliminates the deficit, and everybody goes home happy. So I always like to sort of have a quick chat about that. And that's usually more sort of for management than for council, just in case there is a question. But in this year, there wasn't. So that's about all I had to say, and about as quick as I can go through a set of financial statements. Although it is nice at 10 o'clock in the morning because everyone's still awake. So that's good. Any questions?
Yeah, thank you very much. I appreciate that. I'll open up for council. Do you have any questions?
Just like the school board systems, does municipalities, are they required to set aside a certain percentage of revenues to build up those reserves?
No, reserves are, there's nothing hard and fast in the Municipal Act saying you have to have a certain percentage of your assets held in reserves. It's at discretion of council. Reserves are always at discretion of council. But again, keeping in mind that if the primary purpose of any reserve is to acquire future capital assets or pay down debt, I mean, you do need to sort of be aware of the relationship between those numbers.
Okay. And just another thing, note 10, long-term debt, you know, the debentures and that, is it indicated somewhere is what those were originally for?
Nope.
Okay.
You have a list at the RM, Councillor Lemoine, if you're interested in finding out what those numbers are all about. We do have that easily available.
Sorry, when I answered, I mean, it's in our file, we certainly know because we've got a copy of the debenture, like what they were for, but in terms of on the financial statements, no, there's no, but I mean, your administration would have that.
Okay, thank you.
Anything else from council? No. Okay, I appreciate the time very much. I think that's it. So have a great rest of your day, and we'll probably see you in a year.
Sorry, just one. Well, hopefully it's a lot less than a
Hopefully
year.
earlier.
Yeah.
Oh, yeah, less than a year. So
Yeah.
that's what I meant.
We'll see you when the snow's off the ground, hopefully.
Yeah.
Just a housekeeping point for the administration, just to remember that there are letters that we still require signature on once council's approved drafts, as well as letters that Mitch is required to sign before we can
Perfect.
find.
Yeah, I think our CFO just waved them in the air there, so we'll get them done.
Okay,
Perfect. Thanks a lot.
thanks everybody. Have a great day.
Thank
as
you.
well. Okay, moving on to item 10, adjournment. Do I have a move?
Before
Oh,
we proceed, is council okay with passing a resolution? I know I did not put it on the agenda, but is council okay with passing a resolution now, or do they want time to review the comments that were made by the auditors and the audited report? Up to you.
I'll open up for council discussion.
I'm okay to move ahead.
1, 2, 3, 4 head shakes, 5. There we go. Yes, we can go ahead with the resolution. So would that be item 6.1.A74-9?
Sounds good to me.
And do you want to read the resolution?
Basically, mover, please.
Oh, do I have a mover? Councillor Bondarchuk, second. Councillor Lemoine.
So the resolution would read, bid resolve that council adopts the 2021 financial audited statement as presented.
Perfect. I'll open up for council discussion. Any comments, council?
Which usually comes out in June, from what I'm hearing.
The provincial requirement is that it is to be submitted by June 30th. That, to me personally, is a very, very tight time frame. And as per the auditor stated, especially if you have a whole bunch of consolidated statements to go along with that, it makes it even more difficult. So basically, if we can do it by end of summer, that's great, in my opinion. 21 might be a different beast. We had a changeover in auditing firms. We also had a changeover in CFO positions. So it made it a little bit more difficult than a normal process. Hopefully now we have the auditors in place. Our CFO is not going to go anywhere else but Reachot, and the process will be smoother.
Yeah, I am planning to start in March for 2022 audit. This is on my list. So hopefully we, for our parts, we will be ready for 2022 financial audited by the end of June or somewhere in June. But again, there is the questions about the consolidated entities actually.
Perfect, thank you. And Mr. CFO, if you're handcuffed or cuffed to the chair because of the CEO, blink twice and we'll get you out of there. I'm kidding. Okay, anything else from council? Yeah, go ahead, Councillor Blanchet.
Yes, are we going to discuss, or are you guys going to discuss GFL's involvement in the auditing or the audit report? However, that, as what Ian mentioned, he said it's odd that they're doing it when we own the majority of the shares.
I think, and Mr. Seal will know more, but the way I see it is this would undertake a whole new section that we would need to have. Like, we just don't have the capacity at this point. Am I wrong, Mr. CEO?
No, you're absolutely right. It all started many years ago with Mid-Canada and that system, and they had their auditors doing their bookkeeping, and we still had the same percentage. We just have GFL, who happens to be a much bigger player, many more bodies and reporting systems and whatnot, and head offices in Toronto and all over the place. So it does make for communication and sign off much more difficult. So, yes, it would be nice if we had total control, but it is a bigger beast than what it was.
Yeah, I appreciate that. I just wonder if because they've got the lesser percentage, they're treating us as the low priority, and that's why it's always delayed. But it could be other reasons. Just
Well, I
Not
think we
much
can
we can
just
do, I
address
guess.
it tomorrow with our
Yeah.
other
true.
contact
Sure.
there.
sounds good.
Okay, that's,
all I have.
did we vote on this yet?
Nope.
No, we didn't.
We
Okay,
motioned, we
anything?
can vote.
Yeah, did anyone else have any questions? No? Okay, I'll call for the question. All those in favor? That's carried. Thank you very much. Moving on to item 10, adjournment. Do I have a mover? Councillor Blanchet, second by Councillor Lemoine. Any final comments for our first meeting of 2023? Seeing none, I will call for the question. All those in favor? I will close the meeting at 10:10 a.m. Thank you very much. Have a great 2023 for those of you that will never log on again and watch this. And we'll be here working hard for your tax dollar.
Have a great day, everyone.